The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the Thursday edition, day after Christmas, December 26th. Hope everyone enjoyed the day yesterday. Well, let's go straight to the numbers. Dow is up 52 at 16,410. What is that? A new all-time high. S&P, same thing at 1837, up 4. Now, what I've done is I've considered, let me just put that in there. Now, this is going to be interesting. Let me just double check. That was 60 and then 57. So this is actually E. So leg E in the 120-minute chart of the Dow. There you go. And most important, as far as I'm concerned, I have been calling this B in the Dow. Yes, it could be an alternate wave count, but everything about it says that there's enough strength to get you to at least a D. That's the way I'm looking at it. That means we'd go towards the end of the year to all-time highs, whether we close December 31st at all-time highs or just before that an all-time high and then start a move down going into the beginning of the year. I'm not sure yet. We'll just deal with things as they are. Leg B up, no peak yet. Still leg B, and the VIX is way down at 12.12. Is it 12.12? Let me just check it out. Hey, 12.17. That is so low. That is amazing. Let's go back to the numbers here. So we've got the Dow and the S&P at all-time highs. The composite index, let me just double-check something here. COMPX. Where am I typing that? In the right place? Wrong place? There we go. COMPX. Got it. Oh, I haven't updated it. So let's do the QQQ series. There you go. This is leg D. And what I'd say to subscribers this morning to my opening call, I'm calling this in the chat. Let me just quickly go through that because with the holidays, perhaps some people are off. It's the first time maybe you're listening to my show. My service here at TFNN, first of all, is Monday through Friday. On market days, I'm right here at 877-927-6648, wanting to take your call. Tiger Technicians Hour. Number 2, I have a daily service. It's called the Opening Call. It's a very comprehensive look at the markets, but most importantly, I use the Chapman wave notation. I teach the Chapman wave notation. I teach where those periodic times where we have an alternate wave count. What do you do, and how do you do it? And what I was anticipating, based on this particular chart right here, right here, is that because of the candles, because of the number of white candles, and just one little black candle where the market opened at 15,884 and then closed 9 points lower at 15,875. Other than that, we've had 1, 2, 3, 4, 5, 6, 7, 8. This is the 8th session since the low of December the 12th at 15,703. The stochastics at 95%. The MACD is still expanding. I have no choice. I'm pretty sure this is leg B, and there should be a C and a D to come. What I had said is I suspect that we will close well off the high of the day. Towards the latter part of the afternoon, we would come down, and maybe tomorrow, either today or tomorrow, we would have our first down day in quite some time. That's my thinking. But in the meantime, for my opening call subscribers, we have only got long positions. Right at this moment, I'm not prepared to look at the short positions. I don't want to be biased. I want to just focus on the trend. The trend is up. So when I'm looking at this scenario, I spent a little time this morning on GLD. What exactly is the GLD doing? Well, the left side low of 114.68 is really important. Last week's low was 114.50. Let me just type that in. So in essence, what that says, 114.50, it took out the left side low, and at the same time, it closed above the left side low of 114.68. And that makes this particular period very important. Why? Because there's a technique that I teach, which is the H pattern in my CD introducing the Chapman Wave methodology. And I had a question if I would look at the right arm extension. Very appropriate. Yes, we will. But let me just do this. I just want you to do the H pattern. And in this particular instance, it will be chapter 17. Let me just find it right there. And that H pattern says, whoops, what did I just do? Chapter 17, right there. That if the left side low is taken out, you can continue down. But then there comes a point where the left side scallops to the downside, finds some support, especially if it's the third or the fourth one down. And that essentially tells you that you should go back into the arch formation from whence you came and test a previously important peak. And if the price goes below and closes below, that means one thing. But if it goes below and closes above the left side low, it means something else. And in this particular instance, when we're looking at the weekly chart, I had already drawn in the H that goes to an M pattern, lowercase h that goes to an M pattern. And I'm suspecting on a best case basis that the GLD, that's the Spider Gold Trust series, could have a bounce at any point coming up. And if it does, the key metric is how does it take out 122.32 and can it close above that? It's going to be really important. At this particular instance, what I'm looking at is that the left side low was taken out, 117.23, was just sliced, just gapped down, went right through it, went to the low of 114.50 a few days ago, 114.50. And that means that this particular contract can rally, but that 117.23 level on a weekly basis is going to be really important. Trading at 116.96 right now, up 83 cents. Towards the low of the day. Day's young, so let's just say that it was a nice gap up. We haven't filled the gap yet with the low of 117.29 from the 18th of January, 18th of December. So this is going to be very important. There are some gold stocks that are beginning to look a little bit better. Okay, let's look at the SLV, which is the Silver iShares. This is the Silver iShares Trust. That trust did not go under the 1828 low on the left side, 18.28. And in fact, a very nice little bounce here. And the weekly chart is a little bit more positive because there's a positive divergence in the technicals. And the monthly, this is very different to the GLT. The monthly says that once again, the 200-period exponential moving average has been tested, and so far quite successfully. Now, I happen to we don't have any positions right now in the silver contract or in silver stocks, but some of them have acted a lot better than the golds. So I'm looking at that, and I'm just wondering whether it's worth playing some kind of a pop-up. It might get a little more serious, moving to the upside. I just don't know yet. I'll do a lot of work tonight, and we'll see what happens. So let's go on, and we're looking at platinum is up 26 at 13.59 at PL. Platinum. Yeah, it's one of those bounces. I discussed this a few days ago. I'd say there's some very interesting things going on in the weekly charts of many of the commodities. It's that H pattern, and so far we've been looking at some fairly successful bounces of the left side low bar, which hasn't been touched, and that is very important. Let's continue. Crude oil is just up 25 cents at 99.45, but it's bonds, 128.5. You're looking at bonds down about 10-30 seconds. I have to tell you that as much as I keep hearing everyone saying that bonds are just not the place to be, And I have to agree that it's not how there's 102.11 left side low bar going all the way back to the week of the 23rd of August. It's going to hold, or if it won't hold, because now you're at 102.06 is the low. 102.05 on the TLT. This is going to be very, very interesting. Had a question about copper. Now, I like copper right here. I like the bounce that it's had. I like the fact that it's making a peak D in the daily chart. I like the fact that you've got that H pattern in the weekly chart that wasn't even closely tested on the downside. And now you've made a new recovery high. And the monthly chart is beginning slowly. They're beginning to show some decent action. I still think that copper later on will go lower down, but right now this is acting very well. So we're looking at different aspects of copper and what to do and how to trade it. One other things, because it's in the category of currencies, is that the dollar is kind of holding the 9-period exponential moving average. It must hold 80.20, otherwise it's going to go lower down. And on the upside, if it can break 80.75-ish, that area, that'll be positive. Now, the euro is just stuck. It's made a peak D, and it really looks like the H pattern is going to be tested. How it tests 1.362 is going to be very important. Right now, it's at 1.3685. And the final thing is that I mentioned earlier this week, that I thought that the USD JPY currency pair would make a new high, and it's done that. It's in leg G/C. I think it's going even higher than that. Daily chart is looking very good. And the weekly chart is that right arm extension in leg C, but it could be A, B, C. This could be a D if it's a right arm extension. Let me explain that now. In my CD introducing the Chapman Wave methodology, I talk about the right arm extension. And basically what happens in the right arm extension, let me just show you a chart right here. All right. What happens is there's a completed move to the upside that goes to a D or an E. The price moves back with the technicals pulling back and everything looks fine, and then it suddenly makes a cup formation, and the price of whatever it is starts heading towards the old high. And then what does it do? It actually takes out the old high with a pretty decent candle. And you have to say to yourself, is that a brand new buy mode? In other words, right here, I've got a peak G at 103.728 in the USD JPY weekly. There was a symmetric triangle, which it broke out of. It broke above the 1.3.728 level. And that leg, I've called leg C. I haven't actually put in the alternate count. The stochastic is at 93%, and the MACD is good, but way below where it was before. So I have to decide and decipher, is this a brand new leg C that can still go to D? Or is it that isolated move that moves up with one of the technicals, but not both? I'll be back and we'll talk about that in a moment, and we'll be back with Garo in Newport Beach.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Let's just go back to that for a moment. And what we were looking at here, let me just get rid of this, was a USD JPY. And basically what I was saying in the weekly chart, there could be an alternate count. But the stochastics at 93% and flattening. That's good. MACD is expanding. That's good. So I would be looking at this and say, yes, it has the characteristic of a right arm extension because the stochastic is way stronger than the MACD relative what it had been at the previous peaks. But at this particular point, it behooves us to stay with the trend that's the strongest. And the trend that's the strongest says that the stochastic at 93%, this is likely to be a leg C. Now, when we talk about the diamonds, say, or the Dow, the diamonds, this could be a right arm extension in the sense that the stochastic's at 95% and the MACD is improving but isn't even close to where it was. And in this particular instance, I have to come to the same conclusion. At 95%, that is very strong in the stochastic, and that says it portends higher prices. The MACD expanding with the beta so wide. So everything about this says I should rather say B/A or just plain old B like I did in the opening report than to even have the E considered because it's such a strong move to the upside. And that's what I'm looking at right now, that there is, in fact, very powerful move. I'm not sure if we will get the pullback today towards the end of the day. and going into tomorrow, it doesn't really matter. We're only long, and so far it's helped our positions, of course. So that's it. Now, what would have been different is if the stochastic was at 81% or 78%, and the MACD was where it is right now and just expanding. I say, much greater chance of it fading very soon. However, in the context of having made 8 sessions of almost all higher highs and all-time highs, that's very important. So the right arm extension invariably has one of the technical tools that I look at, either the MACD or the stochastic, not confirming or barely confirming, and the whole thing looks very tentative. This looks very strong. So that's the difference. The right arm extension implies that you are going above the previous high, all-time high, or whatever it is on the left side, the most important high that you've come from, and that there's no veracity in that one of the tools is acting well, but the other tool is just about to turn down. I do not see that at all here in the diamonds. And it's the same thing with the SPY. Garo, how are you?
Thank you, sir. How about you?
I'm very good, thank you.
All right. Here, I have 2 questions, sir.
Yes.
I'm going to ask, first I'm regarding PXG. I do thank you very much regarding that. On 24th, you told me that it's going to be the bottom. After that, 184 and up is going to be a bull, and that's what it happened. I just covered the shorts on 24th, and today I'm long. This is besides the question. If you have the time, you look at that BIOF. B like boy.
Yep.
I like India, O like orange, and F like Frank.
Okay. All right.
This was $240 at 2007.
Oh, I remember this. Hold on a second. Let me just pull this back. Oh,
sure, sir.
Oh, I remember this. 239.40 in July of 2007. Trading now at $1.79. I would say it's had a little bit of a pullback.
Yeah, here there's a point. On June the 15th, 2012, this split 1 to 20 reverse, and that was $4.98. If we divide that to 20, that is 24 cents. If it wouldn't reverse 1 to 20.
What?
And in July the 25th of 2012, it was $2.07, the low of it. And if you divide that to 20, is 10 cents if it wouldn't split 1 to 20.
Right.
So now is $1.76. Do you think, I haven't bought it, I'm just looking at it. Do you think this will go up to, let's say, $14, $15 from here?
That's
in a long run, let's say.
Yeah, I understand you're looking at the big picture, but let's just go through this very carefully. BIOF, which is Biofuel Energy Corporation, trading at $1.79, unchanged right now. Just about 3-4 weeks ago, was a stock that was at $3.52 and in 2 days got smashed down to $1.13. Tried to run up and now has started to rebuild the base. So we can talk about it now because we've got to see how $1.62 will become support and whether it has the potential to move higher. I'll be right back with Garo.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, Visit TFNN.com today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians. Dow's up 68 and S&P's up 5.66. I want to go back to Garo in Newport Beach, California, and we're looking at BIOF. Now, one of the things about a stock like this, first of all, this is one of those instances where it's just historically great to look back and say, oh my God, this is a stock that was trading in the mid-200s, now it's at $1.70. But the history of this has nothing to do with what I would do in terms of analysis. I would be looking at this particular candle, the candle of the 8th of November between $3.52 and $1.13, and then I would narrow it down even more. And what I've done is I've got the large rectangle, and now I've got a little mini rectangle. I'm going to be as liberal as I can in this mini rectangle, and I'm going to give it a base somewhere around $1.70 with a little extension that I'll draw as a dashed line. I'll do it right here, right inside there, to that bottom low there. And this to me is very important, $1.62. So I'm going to make that a dashed line. So the $1.62 that was achieved just the other day on the 17th after very, point-wise, is a spectacular pop-up between $1.13 and $2.74. That's, was about wow. That's a 50, it's about a 60% gain. what happens in a situation like this, because it took its time to come down, and of course this is a different stock, entirely a completely different animal to any of the other stocks that you always talk about. This altogether is $1.79. Stocks that you tend to favor are usually more than $179. So we're looking at something that has a characteristic that is greatly different. Now, here's my thinking. If you were looking towards the longer term, there is a finite way to play it. And for me, it says that at $1.79, if it breaks into the 150s at any point in the next 2 weeks, just expect that you're looking at dead money for a while, because it's just going to hang around and try its best to support each level. It doesn't have to go down to $1.13, but absolutely $1.26, the low of the 7th of November, is in play. But what's happening over the last 5 days, the market is up very nicely, and this thing is in its own independent orbit. And that tells me we're looking at a rectangle formation that if it can contain the price between 172 to 162 over the next, I'd even have to go to, because it moves so slowly, over the next 2 weeks, so let's call it the next 8 to 9 trading sessions. If it can do that, if it pops up once and then holds above $1.85, the most recent high, that's going to give it a really good chance to try to climb up towards the 1.90s, and then that incredible candle with 2.18, the high of the 6th of January, where it looked intraday as if it was going to be a fabulous candle, and then it closes at the low. That's the candle that will be the challenge. And until this particular stock is able to go into the 2.30s and hold, I don't think you can even talk about it upside more than the 274 high of the 14th of November. It's going to be a slow slog. If it suddenly garners energy and it really powers through that, the candle that I've highlighted here in the weekly chart, the candle of the 8th of November, that's the big thing. How does it, over the next 6 to 9 weeks, if it's able at all, how is it going to get there, and how is it going to hold? Now, as a trade, that's one thing. I'm suspecting that if you are looking at this with upside potential, I'm not going to go to the high single digits. I'd be satisfied if this thing broke above 275, because it'll say, wow, now it's got a very slow build in the rectangle towards the top. You know what I'm saying?
Yes, sir. Yes.
So I wouldn't get too carried away. I'd do one of two things. I'd either ignore it completely.
Absolutely.
But I would look at it and say, hey, you cross $1.85, and then the next session close above $1.85, I want to buy the next pullback, giving it a fairly tight stop, but within 7 cents, I want the next pullback. Why? Because it's now favoring the upper side of this trading range that it's been in. If it had to pull back from here, I'm not sure I want to buy even a double bottom. If it retests 162, I want to see that it holds the double bottom, and then I'm prepared to buy it. Because if it closes under 162, you've got something that's not very pretty looking. So it's a very intriguing stock. In fact, I'm pleased you brought it to my notice, because I don't know if it fits into the category of a turnaround stock yet, but there is the characteristic of big moves. Most of them have been to the downside. If it can start to change its character, it could be a very nice buy to the upside. I'm personally saying to you, if you want my opinion, I'd wait a little bit, and I'd rather buy strength.
Yes, sir. Yes, sir. No, I will stick to those stocks that I check, the Visa, MasterCard, PXD, CF Industry. I
think that's best.
Those ones. Yes,
yeah,
sir. Yes,
I think so.
Yes, sir. Thank you so much.
So thank you for calling, Garo. I appreciate it. And thanks for bringing it to my attention. BIOF, folks, we're looking at Biofuel Energy Core. Garo has some very interesting picks very often, and this one is a little unusual for him, but I know I can see what he's looking at. I don't think that I would be looking at $1.75 stock and expecting up in the teens because it hasn't even shown the signs yet of breaking into the twos, let alone anything higher. But it has the H pattern, the rectangle pattern, the testing of the left side, so that's worth watching at least. So now let's do something else. I was asked about in the den. I was asked, did I just lose that? Yes, I did. I was asked about the Nikkei. NK. I'm going to look at the continuous contract because sometimes I just find that I've got a lot of information there, and that's good enough for me. And this is it. I've got it in leg C. This is a continuous contract. And if I had to look at NKH14, I don't know if I've updated it. A, same thing. B, C. Yeah, leg C up. Now, what's really interesting about this particular index is that it's trying to retest, and I've looked at this very often. Folks, those of you who know how I talk about inverted candles, there's a candle I talk about which is the Roman candle. This is not quite the same thing. The perfect Roman candle is the one that was tested from March of 2011 in the continuous contract, broke it, and then had to retest the low, which was 10,020. It tested at 8,420 back in November of 2011, and then started a much, much bigger move to the upside. Now, I've got this I've called this leg D. Oh, I've got it as a leg D. Theoretically, A, I should be conservative. I'm just going to put it in here. I've followed through because monthly charts take a long time to unfold, but I am going to put D/B. Just to show that you can, in fact, have aborted that buy mode and started a brand new move. But what's interesting is that the wick, I always talk about wicks and how they can be treated. Well, this particular wick of the continuous contract from May of 2013, that is what is being steadily filled. And you know, my rule of thumb is you get through to half of a wick and then close above that half. Good chance you're going to test the top of the wick. That's exactly what we're doing. That high was, it's a continuous contract. So I'll give you the high as May of 2013. This particular price is 13,780, but that gets smoothed out. And the high thus far is 16,330. No, I'm doing something wrong here. A high of 16,350, I'm sorry. And the high thus far is 16,330. We haven't taken it up, but I think we will test it. And we're in leg C in the daily, and the weekly chart is in leg C going towards the all-time high. Oh, not the all-time high, I'm sorry. The high of May of 2013 in the weekly chart as well. So when I'm looking at this, wait a minute. 1480, 1440. Yes, exactly right. Leg C, at the moment it takes out that previous high, it becomes E/C. But I'm going to give this a new buy mode. There you are. So I like it. I'm absolutely, yes. Thank you, Naden, for mentioning it. The Nikkei is acting very, very well. Another one is Ivan says BIOF needs plans to lender. Deeds plans to lender to satisfy some debts. Oh, yeah, they obviously have a very serious problem. That's why the stock's down to $1.78. You know, it doesn't happen by accident that stocks are very, very low priced. Happens for a very good reason. That doesn't mean to say they can't have great rallies, but you still have to be very careful. So there it is. There's the inside track for the Nikkei. It's coming in, and the continuous contract says that the 16,005, it depends when, let's just say it's tomorrow, 16,500 to 16,520 is very strong resistance. So I'm looking at this. Everything looks the same. Now, let's run this quickly. IWM. IWM, is this a brand new leg A, or is it, is this a brand new 157? You know, so that could be an A, B. No, it just doesn't work. This has to be a D at this particular point. All right, it's a D. Still very strong action, 92% the stochastic. MACD is very strong. Weekly chart, F/B. Monthly chart, leg E. QQQ series. Leg D in the daily, F in the weekly, could have recycled, but I'm calling it F for now, E in the monthly. You've got the New York Stock Exchange. Now, that's been doing very well lately. let's see what it's doing today. NYA.X. Yeah, I've got this. There's no other way I can count it. So far, I'm still sticking with it as leg D in the daily, leg E in the weekly, and heading towards, this is fascinating, monthly in leg D, it's heading towards the strong resistance, but that resistance is all the way up at 10,455 to 10,573. And wait a minute, what was the all-time high? 10,387. Today's high is 10,321. How much is that? That's 66 points off the all-time high and acting well. I like what I'm seeing here. On the shorter term, I don't see any reason why we should not be rallying into next week. So favorable conditions. I wanted to also look at the XLF. The XLF was slowly garnering some energy and then had a very nice day. Boy, is this an E or a brand new A? Stochastics at 93%. That is good. The MACD, very good. Well, I just have to call it E for now. And this has the characteristic with a 93% in the stochastic and the MACD just turning up of being able to go higher. Leg D in the weekly. If this turns out to be an A, we couldn't get a D until late next week. So I'm going to be watching all of these very closely based on the Chapman wave methodology. And look at this. Every little opportunity sees the volatility index go down, VIX.X, possibly testing 1199 very soon, which was the most recent low. 1183 was the low before that in the weekly chart, and 11.05 was the low before that. I have to tell you, buying pressure, if you kept this on your radar all the years and said, unless the volatility index climbs back into the 20s and holds, that's buying pressure. Just keep it as simple as possible. Just look at this. The VIX index is making the Eiffel Tower in the daily straight up and straight down. The commensurate movement to the upside has almost all the indexes at all-time highs. I also wanted to look at a stock, Cintas. You know, I talk about this every year at some point. Cintas is in uniforms, clothing, etc., rentals for businesses. And as long as it's going to all-time highs, it's telling me that that business is doing quite nicely. So it's in leg A, B, C, possibly peak C if there's no new high today, because the high of yesterday, Tuesday was 59.60, today's 59.59. So I'm looking at this and I'm saying, okay, brand new E in the day, in the weekly, and you've extended leg F, and if it is an F in the monthly, good action, Cintas Core, uniforms, etc. All-time high. Just look at this chart. Wow. Oh, I haven't finished the notation. I used to have this all notated beautifully. Previous high was back in 2002 at 56.62. Just smashed that. It's in the 59s. Isn't that interesting? All right, I'll be back, folks. Basil Chapman, Tiger Technicians Hour, 877-927-6648. And maybe this is the first time you're having a bit of a break and you're listening to me on the show. I look for the lowest low bar, and then I merely count each successively higher peak, wanting to get to a peak D, and then there could be a decent pullback. I'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
We usually talk about Technical Friday, with Fridays where we get a little bit more in detail. But I had a question, yes, a good question, about the IWM Russell iShares, Russell 2000 ETF. Could the 120-minute, what is the count in the 120-minute chart? Well, no matter how I counted, and I've counted this umpteen different times, trying to check to see if there was a change, and there isn't a change. I've got it going all the way to a peak F at that doji high on the 18th of December at 11:30. Pulls back for one bar, red bar, and then there's a bar that goes even lower, but soars above the previous highs. And then it makes a peak A, and now we've got a peak B. That implies that the IWM could pull back a little bit, but it's still going to go to C and D. However, the question is a good question. What do you do when you have the parallel highs at 115.44 at 11:30 on the 24th, and at 13:30 on the 24th you've got a parallel high, and the rule of the Chapman Wave phantom peak is that the third bar has to break out, number one. Number two, you've got to find somewhere in the technicals some kind of a dip, and the RSI and the MACD dipped, but the price only pulled back a fraction, but it had a parallel high. So that says I could call this a phantom peak B here, and I normally change the color to gray. And that means that I'm a little bit ahead of the game because now I'm looking at a potential in this 120-minute bar of a phantom peak C. And that at least gets me ahead of the game. I could do that. What I like to do is just to keep it in mind that unless I've got the veracity, unless I've got the proof, the empirical proof right in front of me, I'm inclined to be a little... I like to be conservative by saying I'd rather be ahead of the game. But here I'm pushing it a little bit to say that that is a phantom B. So I'm at this point ready to just put that dark blue B in and say that's the way it's going to be. But I'm pleased because I've gone through the technicals and I'm ready that if in fact there's one more pop-up that starts to fail, I could say, hey, that's beginning to look like a D because the MACD is turning down or the stochastic's turning down. So I need to be ahead of the game. It's like a heads up. It's just a great way of saying, in anticipation of such and such, there's a chance that I could use such and such. That's all it is, but it's not the official way. Now, let's just quickly do this because we've got, today is Thursday. Aha! We've got Larry Pesavento coming up. Trade What You See is also looking, this is the commodities hour, and we've also got a futures hour, and we've got a great program all day today. So now let me just do this. In the Dow, because this extension, regardless of where it closes right now, has gone over the 16,000, over the 16,390s, which I thought would be strong resistance. It just took it out like it was nothing. That's suggesting to me that this really is, I've got to change it back on this one here, that this really is leg B, and I'm just going to do that. If I'm wrong, I'll change it. I'm not above changing it. You just always want to be right in the Chapman wave, meaning your last analysis must be the one you've got the greatest confidence in. And if you don't have confidence, you have to wait for another peak or trough. And in this particular instance, I'm calling it B. Everything about it says this is a powerful move, stochastic at 95%, any pullback to the low of Tuesday, which is 1629. This is 16,295. I'm sorry. That's 130 or more points below, would say, no, it's much more than that. 16,295. So 300, 130 points. I've got to watch this and say, okay, if there is a pullback, is it going to be a one-day dip and then we move higher? Is it going to be 1 to 3 days and then we move higher? Or, and this is the thing that I'm going to have to watch for, is it going to pull back so sharply that it takes out the 9-period moving average at 16,196, goes right down to 16,124, back into the 16,174 lip of the left side at peak D on the 29th? What do we do? I like what I'm seeing. I think we're going to be going higher for at least this week. So thanks for being here. Stay tuned for Larry. Great shows coming up, and I will be back tomorrow.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.